I swear one of the worst feelings as a trader is to get in the wrong trade. So in today's video, I'm going to break down exactly why I knew to look at YM and why you should be incorporating multi-market analysis into your everyday process. So let's continue. We're going to hop over to Top Step and we're going to look at some trading view charts. What I want to point out specifically is something to do with the idea of rotation, meaning these assets they're correlated. We can all understand that these are all based in the US. They're all based on US companies. However, their holdings represent different sectors of the market, meaning there's a lot of money coming in, but where is it going? And it's that game of shuffle the shell, right? That's what essentially these funds are doing. They're trying to avoid as much risk as they can while also maximizing the return. So on these opening ranges, opening drives, there tends to be a trade-off where one might be super strong and then another one might lag behind. So in this little bit of chart review, we're going to break down exactly what I saw in YM in real time and what allowed me to capitalize on that move for this eval right here. So it's no secret, if you watched yesterday's video, we broke down a few of the key daily levels on NQ. I'll go ahead and reiterate, right? So we had this October 31st low right here, all the way down here. We had swept that, and I said today's action would be predicated on the close of this candle. We didn't get the best close. So today we saw a lot of digging lower. However, there was a trade opportunity that was relatively easy on YM, and I'll show you exactly what I did to capitalize on that move. So coming into today's action, we can see, what is that, right? If we're looking at NQ, what is this? It is very, very, very messy. So we had a couple levels intraday. We had essentially this is yesterday's VWAP. Right? It's like in this area. We also had obviously this wick low. This was pretty much where we saw some sort of Trump discussion. There was something that hit the tape and that drove prices lower. Coming into today, that's going to be a relevant point of interest because whatever happened down here, we're likely to trade back down that way. So there was a few things that influenced the market leading into, the New York Open. We obviously had all these highs forming. And if you want to look at it like this, you can see higher highs, and you kind of see little shifts lower, right? It's that bouncy ball. So it's a downtrend. With that being said, there's going to be points where that will reverse. But going into the open, we didn't have a clear point of reference, right? It was pretty choppy. There wasn't any real reason for it to reverse the way, we might have hoped. But if we look at it on a lower time frame, we can see pretty much what we're going to get into in this discussion as to why YM was the leader. So this is a level on local structure that I'd be more interested in. The reason that this thing right here, these equal highs, they catch my eye is, well, simply put, look how smooth that is. You see that? I don't know if you know anything about markets, but markets tend to like to make things messy. And whenever there's these equal highs, you got to think someone in there, someone short in this, whatever, right? They put their stop right there. It takes the market really no effort to kind of reach above and grab something like that. So these are the points of interest that we'd want to be looking at. However, it doesn't always mean that that's going to happen on our market. Like I just said, these markets are highly correlated, meaning if YM does the job, it might be good enough for NQ to not have to. So what does that look like in a practical sense? Well, we're going to look at a couple time and price levels. We're going to come into the New York Open, right? Boom, right there. We see that this is the New York Open. So initially, we make lower lows, right? Nothing gets swept out. We make a lower low. We make an inverse, and we have just a weak attempt to rally higher. And this right here, we want to also keep in mind. So this time right here is 943. I'm going to go ahead and let you write that down. Keep that in mind when we go over to YM right now, and you'll see exactly what I'm talking about. So hopping over to YM, we'll go back, and we'll look at actually the daily chart. We'll do the same top-down analysis. So we can see that the October 31st low is actually maybe like in this area, right? So we did make an initial lower low, earlier in the year, start of the year actually, 2025. So this would be our point of reference. However, we can see clearly on the daily now that we are, holding higher on YM. So that's actually a point to kind of keep in mind that YM might be favorable looking into the next couple days or weeks. So looking at a structure like this on the higher time frame always gives us at least a hint of what's coming. But regarding what we're discussing right here, we're going to go into the 15-minute. And we can see that off the open, wow, YM really did rally. There was a really strong move initially. This 15-minute candle was not the same thing that you saw on NQ. When we look at the 930 open, we'll draw that out again on YM. We see that actually this data low right here, when we said there was some sort of Trump announcement, there was something that hit the tape because this happened really, really rapid at the end of the day. This is an SMT. This is showing us that YM is doing better comparatively to NQ based on time-based liquidity points, meaning swings that happen at a specific time for each asset. So if there's a higher low forming on one of them, the basic logic is it's more resistant to, holding higher. Like it's able to not go lower. That's the best way to look at it. So we got SMT with NQ. This right here is one piece of confluence. This is a bonus, right? This is merit for the trade. Is that what we trade on solely? No, absolutely not. We do not trade on SMT by itself. That would not work out very well in the long term. So what do we have here? I actually still have the level from this morning, but what we see is actually those relatively equal highs that we had on NQ in the same area, right? We had the same imbalance where we saw the sell-off. We'll draw this out again. Very similar structure on both, right? Breaks down lower. You see these market structure shifts, boom, boom, boom. You get that bouncy ball, right? Until you get to the open, where we see the SMT, and we actually set up a pretty unique trade opportunity. So with these levels in mind, let's go ahead and refine it to the 1 minute so we can get to the point of this video. Right here, this is our 930 open, right? And from the 930 open on NQ, we made lower lows. This one, we're making higher lows. There's a definitive structure shift right here. This is your changing character, your market structure shift, whatever you want to call it, right? You get an initial shift and then you get a second one. So with this second confirmation, it tells us to look for something in this area. That's what we're going to want to base our trade on. We already annotated this level right here, those relatively equal highs. So that would be our draw on liquidity. That is the framework for our trade, meaning who cares what happens after that? That's where we want to be out of the trade because that's where the easy money target is. So with that being said, we look, we see it forms a higher low. Right here, there's actually a pretty simple way to frame a trade. You see a bullish imbalance, meaning a big candle, meaning a shift higher. This displacement, this animation is an indication that there is interest in the market. It's stepping up, right? It's not just chopping back and forth. There is a definitive bias, right? And sometimes these candles could be deceiving, but in this context, we view this as bullish. We didn't expect this to invert. We expected this to hold and reprice higher. And ultimately, that is what happened. And if I want to break down, let's see, trade executions. There we are. We get just a trade that worked. This is a trade that worked. It's very simple. With that being said, this is the trade we took. This is what we capitalized on. And you can do the same thing, looking for relative strength in markets. When you see sequential, meaning one after the other SMTs, that is a really prime opportunity for getting long or short if the scenario is obviously in the bearish context. So if you enjoyed this type of video, be sure to share it with someone who you know misses out on the difference between relative strength, relative weakness. And if you enjoy this type of content, be sure to subscribe and leave a comment. Let your boy know. Till next time, take care.